Hello traders, and welcome to my video on the Darvas Box Indicator, where I'm going to show you how you can use this indicator to take advantage of moves such as this one for over 300 pips. So here you can see the Darvas Box Indicator is already applied to my charts. I'm using the MT4 trading platform, and this is a Euro-Dollar 1 hour chart. You can use the indicator on any trading instrument, Forex, cryptos, stocks, commodities, indices, etc., and any chart time frame. Personally, I find the higher chart time frames, such as the 1 hour and above, to be better because they contain more price data, and therefore the Darvas Box indicator levels are more reliable. Same applies for price action, candlestick patterns, and other technical indicators that you might be using. So this video is my interpretation of the Darvas Box Indicator. First of all, straight off the bat, I'm not going to take the signals as they are. I wouldn't just take every sell signal from the Darvas Box Indicator, and I wouldn't take every buy signal from the Darvas Box Indicator. That being said, it can help to filter trades. Let's just take this as an example. So the Darvas Box Indicator will draw support and resistance around price. Okay, it calculates for itself where to place these levels just to save you from doing it yourself. I think it does a good job here of marking this support. Okay, my support probably would have been somewhere similar to this. Resistance, sorry, would have been similar to this resistance marked on the Darvas box, just as the support level here I think is marked reasonably well. I would have placed my support level in a similar area. So we have this area of consolidation, and when the arrow appears on the Darvas Box Indicator, it indicates a breakout. Okay, and that's how we are going to trade the Darvas Box Indicator, is a breakout of the box or a breakout of the support and resistance, which is basically what the box is showing you. Okay, it goes without saying you don't need an indicator to mark support and resistance. You can just simply draw the lines for yourself. Okay, but I do understand some of you like the ease of an indicator doing it for you. That being said, it does have some limitations in the case that it may mark the levels incorrectly, perhaps not take into account other factors that you can see with the human eye. Okay, so this particular breakout here, based on the Darvas box, if we zoom out, we can see would have been a fantastic entry point into this downtrend. So breakout on the low of the box, over 300 pips of profit in one trade. Okay, as price was moving down, we could have taken our stop loss from initial area of here, just above the recent high, and then just move our stop loss with price above the highs. Okay, as price is falling, we're just moving our stop loss above all the high points. Okay, and we'd probably be around here now somewhere. You can lock in profit on the way down if you want to bank some pips. It's just a good idea to get into the moves as early as possible. Okay, so that's just a basic Darvas box entry on a breakout to get into a trend. Okay, there will be instances where price doesn't break out. Okay, and you might be selling, or for example, if you bought here, this may not have been a great trade. Price goes maybe 20 to 30 pips before it starts turning around. Okay, but then we need to bear in mind that we've already had this big rally, so perhaps we would not have entered anyway this high up. Okay, whereas in this instance, we can see a strong level of resistance. 1, 2, 3. 3 times this has been tested around here. Price has begun to drop. We've got the lower highs. We also have this ledge being formed here, and price does show us some bearish price action, and then we have the initial breakout there, and then the breakout of the Darvas box there. Okay, this is what I said about the way that it draws support levels. If you can see from this big candle here, a lot of traders were probably watching this support level. Okay, so may have been an entry there prior to the Darvas box. Okay, and that would have gave us a tighter stop above this high of 15 pips. and just a slightly more favorable entry. Okay, so as I showed you with this buy-in trade here, it does require some additional confirmation on behalf of the user. I wouldn't just take their signals blindly as they are. And also, it doesn't always do as good a job as at drawing support and resistance, in my opinion, as you can do if you were drawing them manually. Okay, so if we miss that initial entry, we're going to look to get in on this trend, or you just wanted to wait for a trend breakout and then enter on the pullback. I mean, that would have prevented us from getting whipsawed out of this trade. Had we just waited to see if the trend continued upwards, had a pullback and then continued in this direction, we may have considered a trade. So that can be the advantage of waiting for the pullback, as we would have if we don't take this. Wait for this downtrend to form, and then we're going to wait for this pullback, and you can see there's another Darvas box which does give us a breakout entry into this trend. Again, the breakout was down here, which is the low. However, there's probably traders who are marking this level as support. The resistance is good, to be fair. I think the box has done a great job of drawing that. But the support level, as you can see from this big candle down here, perhaps could have got in earlier. Here as well, the fact that the Darvas box is using straight lines means that we're going to be missing opportunities where the support or the resistance can be done on an angle. Sometimes I like to draw mine like this. You can see the price is bouncing from this trend line here, and then we have a breakthrough, and then that line of support actually comes resistance around here. Okay, the Darvas box is not drawing support like that, so that's another limitation I found from it. Again, another example here. Whilst the Darvas box did pick this breakout, I mean, we could have probably traded it based on that, and we would have been in much earlier here. Arguably, this is a more recent level of support. In fact, the Darvas box has marked them there and there. It's just used this low over here, whereas this is, we're looking at a more recent period of candlesticks here. Okay, so that would have been another good entry. Trade in the breakout either of the Darvas box or ideally before. Make sure you're drawing your trend lines, your lower highs. We're in a downtrend. Okay, can probably ignore these buy trades unless you're unless you're counter trend trading. I'd be ignoring these particular signals because we know we're in a downtrend. We're not going to try and buy against the trend. Okay, another breakout here of the Darvas box. Yeah, a good entry. Not a bad entry, that one, especially after all of this consolidation we've had here. Oops, wrong one. Consolidation we've had there, although if we were drawing our support like this, you can see this line's been tested multiple times. It's breached, then it holds up as resistance, and the price does move down from up around here. Okay. Again, lower highs, just trying to get good habits going by marking your lower highs or your higher lows so you know where the market is trending. Okay. Again, ignore this buy trade. We're in a downtrend. Same with this one and this one. This shows you why you shouldn't trade against the trend. I mean, look at these buy entries. They're not good. You may grab 5 or 10 pips here and there, but why do that when you can just grab like hundreds of pips by trading with the trend? The trend is your friend, as they say. Okay, so this is a good example of the limitation of the Darvas box here. Okay, the breakout is all the way down here. You're going to be selling low by the time we get there. If anything, you'd be trading or looking to trade perhaps this ledge here. Again, the support is breached, becomes resistance up here. You're going to be in a lot earlier, which is why I don't rely on technical indicators 100%. They may be good for filtering trades and can be do better when combined with each other, but I don't think anything beats price action. I understand some traders like how pretty indicators can look and it just spell things out easier for you. I mean, with these nice down arrows, for example, down arrow there, that's actually a good breakout trade. Okay, but again, just to reiterate, you could have got in earlier, whether with this level of support or candlestick patterns as well. You have a 3 inside down pattern there, which is a bullish candle followed by a bearish candle, at least 50% of the body, and another bearish candle which goes below the initial candle's low. Okay, you have your lower highs, good habits, mark your lower highs. Okay, so all the signs were there that the trend was going to continue to go downwards, as it does. By now we're starting to think, okay, you know, this trend has been played out quite a lot. We don't want to end up selling too low and getting in too late to the party. Again, another bad buy trade, which is why we don't buy against a downtrend or sell against an uptrend, or just take signals blindly. Okay. There is a breakout of the Darvas box there, but you can see the price does pull back quite significantly. With all these kind of choppy consolidation, we might just want to think about holding off from this trade, or we could have traded the breakout here, okay, this level of support, okay, or we could have waited for a pullback to this level and trade a sell on the pullback. As you can see how well it holds up. I mean, 1, 2, 3, by the time it had tested that 3 times, you would have been confident, okay, maybe I'm going to look to sell, and then sell on the reversal in line with the trend. Still a good amount of pips left in this move. By now we're starting to look exhausted in terms of the trend, perhaps going to be oversold. So we might want to wait to see how it plays out. Okay. So yeah, the Darvas Box Indicator in this particular move, whilst it did have some good entries, they're not ideal. I think you could have got in a lot earlier by just drawing your own support levels, support and resistance levels and trend lines. Good money management with a tight stop loss, locking in profits on the way down, perhaps closing part of the position. Yeah, I mean, it can be good. I can see why some people would want to use it, but I don't think anything beats marking your own support and resistance levels. If we just look at this uptrend here, see this nice uptrend. So we're not going to take the sell trades. I mean, that being said, there are actually, what's that there? Yeah, still 50 pips if you're intraday trading and you just want to catch some short moves. I'd much rather be trading in line with the trend. Speaking of which, this is an uptrend, so going to want price to pull back nearer the trend line. So we have a nice pullback here around this area and a breakout of the Darvas box, which is actually a good entry to get in on this particular trade. You can see that that level of resistance does hold up as support around here. So this is a good breakout trade of the Darvas box in line with the trend for a potential of 250 odd pips. Okay. Maybe here we can see prices come too far away from the trend line, wait for a pullback to the trend line here. And another good Darvas box entry on the breakout there. Okay, 200 plus pips. Even here, perhaps getting late to the party, but still moves there. Darvas breakout there, and even here. But you could also just be marking, as I said before in the sell trend, your own resistance levels and trade on those breakouts. Look at that big breakout there. Okay, nice breakout there. Nice breakout there. Yeah, so the Darvas Box Indicator is I think is good in the fact that it instills good habits in terms of making sure that you're keeping an eye out for support and resistance, and it doesn't necessarily mark it as you would manually all of the time. However, it can just add an extra gauge for you. Although for me personally, I would find that it gets in the way. I mean, if I just remove the indicator from the... No, I won't remove it. First, before I remove it, I just want to say there is another way to trade with it, and that's just to take the reversals on the opposite side. Okay, if you're range trading, you might want to consider doing that. I personally wouldn't. I prefer trend trading. As I said, the trend is your friend, but I mean, you could be looking to buy around the low of the box and sell around the high of the box in a ranging market. Okay. But as I was saying, if you remove the... If I just remove the... If I can get it. If I just remove it from the chart. For me, I'd rather trade in this, believe it or not, just because I can mark my own levels, and I just find this more just a tidier chart. Okay. I can just mark my trend lines and my support and resistance and trade off of those. I don't necessarily need the Darvas Box Indicator to do that for me. Okay, well, hopefully you found something useful in this video and different things that you might want to consider implementing within your own trading strategy. As always, make sure you practice and have good money management. Thank you for watching. Please like and subscribe for more. Catch you on the next one.